Rivian is a company that is strategically positioned in the EV market. Unlike most EV companies that are focused on making family cars or sedans and mini SUVs, it is unique in that it only makes full-size SUVs, trucks, and vans. This positions this company in a marketplace where it is competing with Ford and GM that is already making electric trucks and Ford and Mercedes for electric vans. This means that if you don't want a truck, van or SUV from a legacy manufacturer, this is the only company that you're likely to turn to. But Rivian is only available in the US at the moment. More on that later. Both Tesla and Lucid individually have a truck and SUV planned for 2024, but Rivian is already delivering both. Also, in the electric van marketplace, although Ford and Mercedes are becoming dominant in this area, Rivian has niched down to a type of van that works ergonomically for Amazon, FedEx, and UPS delivery services. As Rivian has started to ramp up production, the only obstacle in its way at the moment are supply chain issues that are currently plaguing all car manufacturers, whether electric or not. Last week, it was announced that Mercedes-Benz Vans and Rivian are planning a joint venture to produce electric vans in a factory in Poland, Hungary, or Romania within the next few years. This will be a 50-50 joint venture where Rivian is expected to bring its expertise in EV technology to drive the joint venture forward. If Rivian is to broaden its reach, it would need more joint ventures and foreign investments to grow overseas. In December 2021, it was revealed that Rivian was offered incentives by the UK government to build a 1 billion vehicle production facility in Somerset, according to the Financial Times. The perks include a new exit off a major motorway for easy access to the plant, the recommissioning of a railway link in the area, and numerous training facilities. The 635-acre site will be used for battery production, car assembly, or both if the plans are to go ahead. The deal would likely include financial support from the UK taxpayer, with the investment expected to be worth more than £1 billion. According to the Financial Times, Rivian is also considering proposals from at least 2 other European countries. Amazon is also involved in the talks because Rivian has partnered with the brand to produce 100,000 electric delivery vans by the year 2030. The future looks bright for Rivian if it can ramp up production and overcome current supply chain issues. The Rivian truck, the R1T, is not cheap compared to GM's Silverado EV and Ford's F-150 Lightning. The Rivian SUV, the R1S, which is a full-size SUV, seems to have relatively less competition at the moment, but that is coming soon from companies like VinFast and Polestar. All other SUVs currently made are not on the scale of the R1S. I believe Rivian will begin to emerge as a juggernaut in the utility EV space and has a better prospect of surviving the current storm. The stock has taken a beating over the last year and is down by almost 68%. And if you bought the stock at its IPO, you probably would have cut your losses by now. But if you bought at the bottom where it dropped to as low as $19.29, you are probably smiling. My average cost in this portfolio for Rivian stock is $26.21, and it's currently sitting around $39. Are you a Rivian investor? Let me know your thoughts on Rivian in the comments below. Now let's take a look at how this portfolio performed over the last week. So this week has seen a massive drop in stock values across the board, and as you can see here, for the month of September, the portfolio is up only by 0.27%. So it'll be interesting to see whether the portfolio ends up in the green. The risk score for this portfolio is still at 7. Taking a look at the portfolio dashboard, there are 4 out of the 10 stocks in this portfolio that are in the green, and the rest are in the red. For this week, Rivian is the largest profit-making position, while Genius Brands is the largest loss-making position. The total portfolio allocated remains the same from last week. The loss on this portfolio has widened this week with a huge sell-off from all stocks across the board. Hence, the total equity has also reduced from the week before. The loss on this portfolio has increased by 3% from the previous week, and the performance against the S&P 500 is 1.77%. Finally, the overall portfolio performance from the previous week is down $1,050. So I've rejigged the portfolio dashboard a bit. So you can see at the bottom right hand corner, I would always have the stock spotlight. In other words, the stock I'll be talking about on a weekly basis. Looking at the weekly portfolio performance graph, we can see here that the portfolio has taken a downturn from last week, which is reflected between week 13 and week 14. So looking at this portfolio performance against the S&P 500, this portfolio is down 3.38%, while the S&P 500 is down 5.15%, and this portfolio is outperforming the S&P 500 in the last week by 1.77%. In the last month, this portfolio is down 13.53%, while the S&P 500 is down 9.38%, and this portfolio has underperformed the S&P 500 by 4.15%. Looking at the year-to-date performance against the S&P 500, we can see that this portfolio is up 9.06%, while the S&P 500 is down 19.25%, thereby outperforming the S&P 500 by 28.31%. I want to say thank you to everybody who has supported this channel so far. There has been significant interest in the videos, and I hope I am putting quality material out there for you to be able to digest and to enable you to invest from a contrarian point of view. I hope you're finding this channel useful and that it is a typical example of risks that you can take to help shape your portfolio. To make this project successful, I need your support. So if you can support me by hitting the subscribe button and also smashing on the like button, I would really appreciate it. So take care and thank you for your support, and I'll see you in the next video. Bye.